Good morning, everyone, and welcome to the European Crossover webinar. And we did have a pretty big day yesterday, obviously, and we're just going to touch over a couple of things. And let's go and pull up the economic calendar. So we did have import prices out of Germany that came out, as well as French GDP and consumer spending, and Spanish HICP flash numbers. Coming into the States, we are going to have personal income and consumption. They used to call it personal income and spending, along with advanced good trade balances, wholesale inventories, and Canadian producer price indexes. And we will have University of Michigan. And let's just take a look at where we are. There it is. Here we go. Here's the euro, and we did go and get a pretty good little pullback from the euro after we'd taken out resistance, which is at 2207. Blew some stops up here, but they came back after all the everything that had gone through with equities. And take a look at the cable. Also, there's also come off those highs that we had up there. What was it 42.42? Same thing. We're still pushing a little bit weaker here. And the Aussie really came off quite a bit. We had resistance at, remember that was 79.94. Had that weekly close level. And we did get up here to 80.06. And saw a pretty good pullback. You can see where we're finding support right here. Looks like it's 78.02 or so. As well as the Kiwi. And just a quick look into the indices. Obviously, pretty good sell-off that was sparked by the moves in bonds. We just came down here. You can see here down to this 12,660. That was a pretty good solid level too. I actually got long on its first trip down here, but it was only for just a little bit. But I was pretty tired. I went to sleep. Down here, you can see here in the market, it didn't immediately just shoot up like that. It just kind of moved up a little bit here. And but anyway, it looks like we made it up here to and then dip back. Now we've made a pretty little solid little run back up in here. And take a look at where we are on Bitcoin. Oh, we finally got that dip in Bitcoin. Still looking, I thought it would come here down towards 42. We do have support at 44, but I thought we might be able to blow past it. We'll see whether or not it does. And if you're looking at the S&Ps, pretty good slide here. Although I don't pay much attention to the S&Ps. You can see here, yeah, we came right down here to this level here. Pretty key level too. And they bounced off that. 12,856 is that monthly level too, so we'll have to see how we hold up. And with that, we'll take a look at the news. The Aussie dollar upset by the market tumult, and the RBA tries to staunch the bond bleeding. The Aussie dollar was sent reeling from multi-year peaks on Friday as a rout in the bond markets spread to the other risk assets, spurring the country's central bank to intervene to stem a savage sell-off in government debt. The Aussie had been flying high overnight as it cleared 80 cents for the first time since 2018, but gravity returned it with a bump when the world stock market took fright. Um, that left the currency at 78.60. The New Zealand dollar suffered a similar fate, lapsing to 73.69. Still, the pullback was nothing compared to bonds, where the market saw some of the biggest price declines in years. At one stage, the Australian 10-year bond futures were down as much as 22 ticks at an 11-month trough at 98.04 before bouncing to 98.26. Cash yields spiked to 1.97. The selling pressure became intense, so intense the RBA launched an unscheduled offer to buy 3 billion Aussie dollars in a 3-year debt. Markets are also wagering the RBA might have to hike rates as early as next year, when the policymakers said no move was likely until 2024 at the earliest. Thoughts turning to the rate hikes are understandable given the greater confidence in economic outlooks at Peter Monkston at Bank of Queensland, but pricing looks increasingly at odds with stated global central bank policies, which have made it clear that rates will rise later in the economic cycle. And the dollar firms after the U.S. yield spikes, and yen continues marching lower. The U.S. dollar held gains on Friday after rebounding overnight from 3-year lows, following a spike in the U.S. bond yields to yen, which tends to weaken when the U.S. yields rise, slid for a fresh 6-month low versus the greenback. Government bonds, and particularly U.S. Treasuries, have become the focal point of markets globally, which have aggressively moved to price in the earlier monetary tightening than signaled by the Federal Reserve and its peers. The yen's decline came even amid a sell-off in stocks as the surge in yields fomented inflation worries. Cryptocurrencies also tumbled, with the Bitcoin sliding 5% overnight and Ether dropping 9%. The fixed income route is shifting into a more lethal phase for risky assets after the initially being interpreted as a story of improving growth expectations. Westpac strategist wrote in a client note, "It appears to be the case that the bond markets are taking on the central bankers' worldview. Bond yields have climbed this year, and the outlook for the massive fiscal stimulation amid continued neutral easy monetary policy led by the United States. An acceleration in the pace of vaccine globally has also bolstered what has become known as the reflation trade. In recent days, though, inflation-adjusted bond yields have accelerated, indicating a growing benefit that the central banks may need to pare back from ultra-loose policies. The benchmark Treasury yield spiked 1.6 overnight for the first time in a year after an auction of 62 billion. The dollar index edged up to 90.38, holding to a 0.2 rise from Thursday. So with that, we'll just go and move into the analysis. I mean, we pretty much already know what happened. I mean, I don't think I've talked that much in forever. One moment. In the chat room, I mean, I was just nonstop, almost all the way through the morning, the European session, almost all the way through the day. So we all know what happened. You know what I mean? So, it's no sense, rehashing essentially what had happened. I laid out all the reasons why I thought we were going to see a sell-off, why I thought the bonds were going to do this, blah, 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 blah. And we talked about the levels, and those were all there, and we already see what matriculated with that. So, If you were there in the chat room, you saw it all. So we're just going to move in now to the analysis. And we'll move on to the euro dollar. Put it like that. Makes it easier. No, I should just move this. So the euro gun stops on Thursday, but paired back just above the breakout level, but paired back just to above the breakout level in light of the equity sell-off. Support will be 21.31 with resistance remaining at 22.07. So remember the 21.31 was important. Remember last Friday, and we were saying, hey, whether or not the Bears could defend that. And then, of course, we moved higher, and our breakout level remained at 21.59. We finally got that on Wednesday. The market took off. But then when we came back, we just closed just above it, but we're dipping back. And you can see 21.31 for support and resistance remaining at 22. And that should be 22.07, which is what we already had. On to cable. So cable found some downside momentum after pulling back from the yearly close resistance on Wednesday. Support on Friday is going to be 39.46 with resistance at 40.81. Well, we're actually even dipped below this 39.46. So, but I'm going to leave it where it's at. I said 39.46. I guess you could have gone like this right here. You see right there, this close. There was a little bit of a nudge, but so I guess you could look at it there, which would actually come in at 39. Well, it should be with 39.14. But I went with this high there, so I'll go with the 39.46. But 39.14 might make a little bit more sense. Not a whole lot, but I was just once again just going with the technicals. And resistance would be 40.81. And the Aussie dollar. Aussie continues to ascend. Resistance. No, that's not even correct. I don't know why that did. Oh, because Blake had put in he had done some analysis. So that's why I didn't update mine. So let's see where we stood. So we know we prepared back. So looking at my own analysis, and we saw that big pullback. Blake was calling that top there. Good call on his part. We did go and dip back. Resistance would be the low from here. So that would be, I'm just eyeballing it. It looks like it almost made it to there. That low here. 78.80. And support. Well, you can see that it's looking like almost cherry picking it, but hey, look, that's how I just do it. So there, and you can see I always, like here, I'll go at the bodies, but when we get a move and it drops all the way back, then I'll usually go with one of the lower wicks because I'm not thinking it's going to come all the way back up here. Like you can say, well, it'd probably be there. I wouldn't think the market would make it all the way back there. So what's the lowest wick here? Be there. And then support, you can see that clears the bell. That comes in at 78.02. Not cherry picking. That's just the way I pick out support and resistance, and y'all know that by now. Let's take a look at the Kiwi. The Kiwi paired back on Thursday. Support on Friday will be 73.07 with resistance at 74.08. Well, they're keeping these markets in check right now. And moving on to the dollar CAD. So the dollar CAD posted a solid rebound on the backdrop of the equity sell-off. Resistance comes in at 26.58 with support at 25.61. Oh, looks like we almost came to it. Look, 26. Yeah, 26.51. It's going to be 26.58. And support was 25.61. And like I said, I generally will I won't leave too much as to the here's and whys and where's. I don't really think that that's important, especially when what we're looking for is scalp levels or what we think that those will come or what we expect. Because like I said, these never are expected to call the outright high or the low, but where we expect volume to come in for them to try and defend it. If they get beyond it, that's pretty key then, the way I look at it. So I'm not here to go and say, I mean, obviously yesterday was pretty big impactful day for the bonds and stuff, but when we're looking at these scalp levels, I'm not trying to say what all transpired, just provide what is key, which is these levels. And moving on to the dollar peso. Now, this has been a wild one. The dollar peso ripped on Thursday, taking out 21 before closing near 1983. Resistance on Friday will be 21. Oh, look at that. Not bad. With support at 2073. Now look at that. Well, I mean, it's right at 21, and the low was, 2079. So, but like I said, we're here to look at get the levels where we think business may be transacted and not the here's into the where's. I think, if you don't know by now what happened yesterday, and then you must have been on vacation. Moving on to the dollar yen. The dollar yen closed mildly higher despite a big sell-off in equities. Resistance will be Thursday's high of 539. I meant 639. Doggone it. 639 was supported 560. Well, they're trading pretty quiet. Look at that. See, that wasn't even too far. If we had 629, it got to 639, so not bad. Hang on, and the low is 560, I think I put. We'll double check. $560. And moving on to the dog with fleas. And I hope I don't hear anyone saying about the dollar rallying. This mutt has been all is sitting is in the basement. And thank God, even Reuters even said the dollar firmed. They didn't say anything about rallying. This thing didn't rally. Look at the colossal sell-off we saw. This thing should be pushing closer to 92 right now. So this thing did not rally. I don't. You can barely even call it that it firmed. All it did was stop falling. So let's take a look at what we had here. Despite the sell-off in equities, the dollar's action was rather muted. Support 89.64, which we had, held. Support for Friday will be 89.89 with resistance at 90.42. And you can see our support was 89.64 and the low I think was 89.68. But anyway, the support for today will be 89.89 for the dog with fleas, and resistance is 90.42. And we're there, but I don't think it means anything. You see what I'm saying? It's just that's where there's resistance. I thought they may be able to take it out, but okay, if they take it out, it's really irrelevant, to be quite honest with you. I mean, you could maybe move to here and say, oh, it'd be 90.62. I don't have any confidence in this mutt with fleas. So I'm saying is take it for what it's worth. I just kept it as 90.42. But maybe you could say here, but could it push a little bit further? Maybe, but does it really matter? I mean, you see a massive sell-off and a massive run-up in bond rates, and you still can't even move higher. So, I think it's inconsequential whether it's 42 or 62. Moving on to the cross rates. Saw a pretty big move with the Kiwi. So you can see here we're trying to dip him back. So we had $79.03. Our low was $78.30. Let's see where we go now. So because it's been such a big move, we'll have to take a look at the 2-hour chart. Potentially down here to 77.34. But there's a little bit of a grouping right here. I mean, we've already pulled back a little bit here. We're finishing up the week. I will go with that in case it do take a little bit of an extra dip. So 77.35. And resistance is going to be this wick right there. See that? 78.47. Euro pound. Well, we did establish a pretty good little wick, and then this thing firmed up like bananas. Resistance is going to be obviously right here. 87.53. I don't know if it's going to get that high. You can look at that wick here, which looks like where they ran into some trouble. But looking further out, we'll just go with this lower wick here for now, which is going to be 87.38. And support will go right there, that line, that level right there. Keep it simple. 86.36. Why the heck did the stupid euro odd go? Okay, let's go down here and type it in. Same here, the way this bolted up. Um, See, that's the true resistance coming up, but do you really think it's going to make it all the way that far? Probably not. So the resistance would be this lower wick for now. We've already hit it though. We took it out just a bit. It's going to be right there, 55.11, although we've already hit it. But when you get that type of a run, then the bodies are going to be count, but not for today. I think that the market is just responding to the wicks at that point. And then support, we'll just go with the wick here. And that's going to be 53.96. On to the Euro Kiwi. Same thing here. You see how it popped up? That's the real resistance coming up. But do you really think it'll make it there? No. So we go with the wicks, and you can see that's where they went to. See right there to that wick, 66.13. So generally, if you see a move like that, if the market's building up, you're going to go and see it challenge the bodies. I mean, the body's going to be where it's key. Because I always tell you, the bodies are where it's put up or shut up time. So the body's going to be the closes on, let's say, your hourly, your 2 hourly, your 4 hour, or your daily. That's put up or shut up time. If you're in a position, you're like, okay, I got to get out by the close of this bar. Oh, that then it tells me I'm wrong. So that's what I'm saying is you put up or shut up time. But on a wild move, then like even intraday, like if on an economic release and you look at on a 5-minute chart or even less than that, then you're just looking at wicks because where will it rebound to? Because the market's not going to wait till then. It'll just go and use that recent wick or key wick to go off of. And you can see they went right to that wick and then they came off. Then support, let's take a look at the 2-hour chart. I don't think we're going to make it all the way make it down here. So, I mean, do we really think the market's going to come back down to here? Not likely. So we try and find a happy medium. There is a little mini doji here, although it's a 2-hour chart, so it isn't that like a 5-minute chart. So we'll go with that. So 64.68. Then to the Aussie Yen, this thing has been a flyer. That thing's been on fire. So we paired back. Here's that wick I'm telling you about. So we'll go with that. You see here, go down to the wick, which kind of confluences here with this top here. And we go there, and that gives you right there, 82.91. And on the upside, let's go with the 2-hour chart. Here's here right here. You see that right here, that body. Do you really think that would be the resistance? And then we would actually look at this wick down here. If they were to come back, they're going to run out of gas at that wick. So I don't think it's going to try to go north. If it were trying to go back that, but so even if it tries to come back, I don't think it's going to snap all the way back here. That would be 83.49. We're at 83.08. The body comes in at 83.36. It's already had a pretty good fall. So yeah, we'll go with that wick for now. Now, normally I'd be saying, okay, let's go with this body, which kind of comes in close here. I don't think it's realistic that the market will come all the way back to 83.70. Right there. So I think if the market will come back, anybody who was long, they'd be going, if I can get back to here, I'm flat. So I'll go with that, 83.50. Same thing, right? As I said, when you get a big move like that on the rebounds, you're looking at the most recent key wicks. And with the guppy, paired back, this can be support right here. You see that right there, this body, this close here, open right there. It's gonna be there. 47.60. On the upside, let's take a look at the 2-hour chart. It's going to be the wick. You already know that now. You see that? Now, could we go with this wick? Possibly, but if the market really got the bejesus knocked out of it, do you really think it's going to, someone who's stuck is going to say, I'll try and wait for this one? Probably not. So I'm just going to go with this lower wick here, which is, that was 48.21. What's the difference here? 48.45. We'll give it to it right there then, since they're so close. 48.46. Because that's, you see, that's the most recent key relevant wick. This was on the way down. See, ding, 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 ding. This one, they came back. So, yeah, it'd be this wick, 48.45. And the sterling nod. This is sloppy. It's been all over the place. It's just going to be this body right there. You see that right there? 78.42. That hasn't been like the other ones, making significant highs and lows the day before. Support's going to be simple. It's just going to be right there. 77.34. I don't think we can get close to it, but that'll be a good key. I'll let me throw back up here. Amira says to take a look at platinum. Okay. Well, you can see what happened here the day before. And notice how they ran out of gas right there at that weekly level here. This 1350. And we've broken lower here. Let's take a look where we are on a daily. Well, you can see here we're at this 20-day moving average. So you might find some support in here. You see this wick here, right there? That comes in at 1204. And that's confluence in here with the 50-day moving average, which comes in at 1206. So you may get a little bit of a bounce off of this. May not be much though, but and then the key would be immediately would be 1242. And that'll be it. I'll put this in the chat room and we'll see you there later on in the chat. Like I said, we all know what all happened. Well, I will go on and I don't even know how to look at nickel. Didier said look at nickel. I don't even know how to look at nickel. I really don't. I'm being sincere. I don't even know if there is, if you can pull up nickel on I was gonna put NK, but that's Nikkei. I don't know how to pull up nickel unless someone has the code. Let me see. Hold on. Nickel. Nickel market outlook. I don't know what the code is for the nickel, and that's an LME product. I don't think it's on this platform. If it is, I don't know what it is. So I don't have a code. If you have a code for nickel, I could try and put it in. I do say it says LME nickel price, but I don't think it's on there. But anyway, we'll just take one quick look at. Mark says, can you take a look at the Dow and the gold? Oh, okay, sure. Hold on. Let's go to the Dow. It has stayed pretty firm up in here. I'm surprised I don't even look at the Dow. And that's one of the reasons I don't look at the Dow. It wouldn't ever respond. Yes, just finally yesterday, but I'm saying is look at that. It was like, I wouldn't even trade this. I've tried to trade before. It's like, and I said that once in the chat room a couple of days ago, was that, you have to sit in it to get limited out, but they'll run over you lickety split. So no way. But the key on the Dow, same thing here. I would just we'll go with this body here. Will be right there at 31.55, 31.554 right there. And on support, right there, 31.076, 076. This one is just weird, the way that thing's stacked up. I don't even know anyone would trade this thing. It doesn't even move. Look at that, just like this, in a real tight range. And like I said, it takes forever to get limited out, but if you're on the wrong side, they'll run over you. Then you said, look at gold. See, remember we were talking about this a few weeks ago, 1860. Remember when I said the market needed to hold this area, and we came back and we were talking about it getting above 1838, and then we got past this 1858. Look where it always goes the same thing. I always say return to the scene of the crime. Look, they rally, where they go to? Right to the 1816. They're rolling back. They're at 1754 right now. You have to take a look at it on a weekly level. That's key area right now. We can just put the, actually do it like this, and they'll have the continuous. You can't beat this TradeStation platform. I mean, this Thinkorswim platform. If you have access to get it, it's free. I mean, you open an account there. Right there. That's its key support there, 1762. So we may see this thing start to finally get a little bit of footing there, 1762. If it dipped below that, there's still additional support, 1753. Actually, that's where it went to, 1753, that right there. But it really comes in right here in this area. So this is pretty good solid support between 1753, 1762. They actually went to 1753. See right there? Going with this body here. But, Didier says it's NL. Well, we'll see whether or not it pulls up. I mean, if I can pull it up on this platform, I don't use the other platform, the, what do you call it, that some of the guys use, because it was frustrating because it would keep locking up, and I was like, enough of this. That's why I just switched over to using the Thinkorswim, and I'm happy with it. See, I don't think they have nickel on Thinkorswim. Let's see, /NL. I don't think it. No, it's not. It says it's Coinbase, whatever. Nope. No nickel. I can type it in to see if it would be. I don't think so. Nickel. I don't think so. Yeah, it didn't even come up. So sorry about that. But with that, we'll leave it there. And thanks for joining us here on the European Crossover webinar.